All right, guys, not a bad day to be an Alibaba shareholder. Alibaba just released their quarterly reports, and the stock popped up a nice 11% right now, 10.87%. So in this video, we are going to go through some of the numbers just to give all you guys just a little rundown on this quarter. So starting first here, we're going to read this little article that was written by Yahoo Finance, just a quick little summary. So Alibaba, they did miss on the top line slightly. So Alibaba missed market expectations for quarterly revenue on Friday. It reported a total income of 34.6 billion in the first quarter ended June, just below analysts' projections. The company's e-commerce business faced tough competition and challenging consumer demand. This has been the story for quite some time now. A lot of competition from PDD and JD, but I think Alibaba is doing a pretty good job of navigating the environment nevertheless. So buyer confidence in China has been hit by an economy weighed down by ongoing property crisis. True. The country has also seen weak wage growth and global trade disruption, the tariffs, of course. Consumers stayed cautious even as e-commerce firms brought in large discounts and price cuts to drive demand. Those challenges outran gains in its cloud computing business, where revenue surged more than a quarter to 4.67 billion, way above analyst estimates. So that is the key line. That is the key line. It is all about cloud right now. Cloud continues to surprise investors. It continues to accelerate. And one of my biggest arguments for Alibaba stock is it's turning into an AI play. And you can see this in this next line here. Alibaba has been among the most aggressive companies in China's AI sector and has regularly rolled out upgrades. Okay, and that's key. That is key. So Alibaba is the most aggressive company in China when it comes to AI. So Alibaba is China's premier AI leader. So when you buy Alibaba stock, it's not necessarily about e-commerce anymore. It is about AI. Similar to Amazon with their web services, right? Amazon, they have their e-commerce market, of course, everybody knows that, everyone shop there, but they have this whole other business on the side, which is web services, right? And that is actually kind of their cash cow. That is their high margin business. And I feel like Alibaba is kind of becoming similar in that regard, that they have their legacy business, but now they have this side business that they're working on, which is AI, which is the massive trend. And that business is doing extremely well. So we'll get into more of these numbers here. So we'll just read kind of the beginning of this report here. So this is just reported this morning before trading hours. This quarter, our strategic focus on consumption and AI cloud delivered strong growth, right? So AI gets a mention in their very first line. So that tells us that that is kind of becoming their focus, and that is the strong part of their business. Our decisive investment in the quick commerce business achieved key milestones as we won consumers' mindshare. We generated substantial synergies from combining resources of our consumer platforms, which resulted in new highs in monthly active consumers and daily order volume, driven by robust AI demand. Cloud Intelligence Group experienced accelerated revenue growth, and AI-related product revenue is now a significant portion of revenue from external customers. Looking ahead, we remain committed to investing in our two strategic pillars of consumption and AI plus cloud to capture historic opportunities and drive long-term growth, said the chief executive officer of Alibaba Group. Our core business delivered strong revenue growth. Customer management revenue grew 10%, and revenue from Cloud Intelligence Group grew 26%, which is a phenomenal number. especially considering the fact that last quarter, cloud revenue grew at 18%. This quarter, we're growing at 26%. So that is a massive pickup in cloud services. So that is very, very key. That's a very important number. And it is a number that really confirms my thesis in this company, which it's all about AI, it's all about cloud. And of course, core commerce is important too, but that business is doing pretty well. But it's not the exciting part of their business right now. So we'll go into this a little bit more here. The strength of our core business gives us confidence and resources to make significant investments in quick commerce and AI initiatives. We also executed well against our commitment to improve operating efficiency as AIDC significantly narrowed its loss to approach break even this quarter. And they're talking about their international commerce segments there, which is another fast growing business, but it has been historically unprofitable. So if they can get that to profitability, or even, if they can get that to profitability, that's going to make a big difference in the overall financial picture of Alibaba. And they are making good progress, as we can see in this report. So we're going to go down here a little bit and look at the results, the actual numbers here. So revenue came in at 2%, but that's because they divested one of their businesses. And so if you adjust for that divestment, total revenue grew at 10%. Income from operations down a little bit, adjusted EBITDA down a little bit. And again, this is due to those divestments, right? So net income, well, that's just a very interesting number here. We're up 76% on net income, which is huge. So those are some of those numbers here as it relates to the bottom line. But this is kind of the important slide here that really gives you a good picture of the overall health of Alibaba. So we have e-commerce, year-over-year change, 10%, customer management, 7%, direct sales, logistics, and others, 9%, quick commerce, which is a relatively small part of their business as of now, but it's doing pretty well at 12%. China commerce wholesale, 13%. So total Alibaba China e-commerce revenue came in at 10% growth, which is a great number. I mean, you really cannot go wrong with 10% growth, especially for a company that is trading at a forward PE of about 15. So their core business, it's when you read the way people talk about the company, you would think that their core business is doing poorly. But when you're growing at 10%, you're not doing poorly. You're doing pretty well. And, for, a lot of analysts to be like, oh, there's a lot of competition in China. They're struggling for market share, etc. But their core business is growing at 10%. And it's growing at 10% during a time when supposedly the economy is slow, supposedly during a time when the Chinese consumer is weak and don't want to spend money. They're still growing at 10%. So imagine what's going to happen to these numbers when the Chinese economy truly does begin to pick back up, when consumers do regain confidence in the economy and start spending money again. This 10% number here, this is going to blow up. I fully expect this number to accelerate in the coming quarters and years. So where does Alibaba trade at when this core number begins to accelerate to 12, 13, 14, 15%? Now, you're going to get a massive valuation reset to the upside if that, or when that happens. So, but it's doing 10% growth during a time when supposedly things are bad. So, I'll take that number. I'm very happy with 10% growth. That's a phenomenal number, especially with the current valuation being as low as it is. So, and this is their Alibaba International Commerce segment. And here we're getting 20% growth. 20% growth. 20% growth is a phenomenal number. Now, if this was a US traded company, they would be demanding a much higher valuation for that 20% growth. But realistically, if you were to kind of analyze all of the numbers in the way Wall Street is valuating this stock, really, they're giving no weight, no credit to international commerce at all. They basically back out that entire business from Alibaba's market cap. So you're really getting this business for free at the current valuation. It's not even priced in at all. And the reason why it's not priced in is because it has been historically unprofitable. And considering that there's concerns about the broader Chinese economy, Wall Street's just like, we don't even care about digital commerce. It's unprofitable. But of course, if that goes to profitability and things become a little bit more bullish going forward, Wall Street's going to take a look at that and be like, hey, 20% growth, that's actually pretty good. We'll start to, add that into the market cap a little bit more. Um, Going into cloud, which is, of course, their big business, their fast growing business here, the exciting business. And it's growing at 26%, 26% growth. That is a very, very healthy number. And not only is it a healthy number, but it's an accelerating number. As I said, last quarter, Cloud Group came in at 18% growth. I can just pull it up here. This is last quarter. So we have Cloud Intelligent Group, yeah, 18%. So there was an acceleration of 18% to 26% over one quarter, which is very, very critical. That is a phenomenal number, a very healthy number. And as we can see, based on these just top line numbers here, just based on revenue, it's coming in at 26.549 billion. Okay. Now, I remember a time when the cloud business was quite small, where it didn't really have that much of an impact on Alibaba's overall revenue. But now, because it's growing so much faster than their other businesses, practically 3 times faster than core China commerce, this number is actually beginning to really make the numbers look good, right? Because core commerce in China, 127 billion, and cloud is at 26 billion. Okay, so and it's growing at 26%. So it won't be very long before this becomes an actual very significant part of their business that's going to be contributing to the overall revenue growth. So I'm very excited about AI, and I'm very excited that Alibaba is positioning themselves as the AI leader in China. And just look at the AI leaders in the United States, like NVIDIA or even Palantir is kind of considered an AI leader, right? And these companies are trading at these massive, massive multiples. They're trading at, like, what is Palantir trading at? Like 300 times earnings? And in China, you can buy the AI leader for a multiple of 15, right? So it's massively undervalued on a relative standpoint. And that's why I like this stock. So we have a growing company. Um, we have a growing company with an accelerating growth rate in an economy that is likely to pick up as time goes on. So this growth rate is likely to continue to accelerate throughout the business, and you're buying it at a very, very low valuation. So, and we can also just take a look at the chart here. Again, as I said in the last video, I said that if we got a nice earnings report this quarter, we're probably going to go and challenge this local high or local top that we put in back in March. And you can see here that it's looking like we're going to do that. We've got some momentum now. I think the story is going to continue to be more about cloud, more about AI, as that business continues to grow and contributes more to the overall revenue of Alibaba Group. But I think that we're probably going to go and challenge this pretty quick, this 148 level. And if we can cleanly take out this top, then, what's next? I mean, realistically, after this, I mean, you have you've got some resistance in this area. If you can break through that, like next thing you know, we're challenging the all-time high here. So at this point, I mean, really, really, it really appears as if the bottom is in on Alibaba stock, and we are in a nice confirmed uptrend. But the great thing about it is it's still early, and it's not euphoric. The valuation is still low. So if you haven't gotten into the stock yet, it's not a bad time to do so. I mean, probably don't buy in a day when the stock's up 12%. You can wait for a little pullback, etc. But overall, I think the chart is looking really solid. I think the fundamentals are looking really solid. And I really don't have much to say about this quarter that would be negative. I think it's overall pretty good. Yes, broad Chinese economy is a little bit weak, but the numbers are still solid and it's very investable. There's so much upside just when it comes to the Chinese economy improving over the coming years with stimulus from the government. Maybe if the trade war were to kind of wind down and get a deal with China, there's a lot of positive catalysts going forward for this stock. And even if things aren't that great right now, the numbers are still very respectable. Cloud is phenomenal. So, yeah, these are my kind of thoughts about the quarterly report that dropped today about Alibaba stock. And if you like Alibaba related content, subscribe to my channel. I make frequent videos. All right, guys, thank you for tuning in.